Welcome back. Hope you're having a good morning. The start of the yesterday's 50 suggesting that we're going to open up in the green. But remember, on a day-to-day basis, we do have a fair bit of intraday volatility. So let's hope, from a bullish perspective, that we can build onto those gains. But plenty of stocks to discuss, and to help us out with that, we're joined by Hemang Jani, retail equity strategist at Motilal Oswal. Hi, Hemang. Good morning. Thanks so much for joining in. Hemang, I wanted to ask you about Paytm. The stock is a third of what it was when it listed. But there is some positive news flow that's coming on there. You got those, NPCI, the interoperability guidelines, which could be good for them. Besides that, any view on the stock at current reckoning?
Good morning, Nigel. I think Paytm, if you see past few months, we've seen a good, pullback in the stock, and the data points, in terms of the usage and also the management commentary in terms of turning into, profitability much ahead of time is surely helping the stock, and it has done pretty well. I think the recent guidelines wherein the KYC related norms are relaxed could add to this positivity, and you might see some more upside, but this is the space where we are not too confident about in terms of how the market would take because of the way things have panned out over the last 1.5 years. So they do provide short-term opportunities for retail traders, 10-15%, and from that perspective, surely it's looking good. But we would avoid, giving a long-term view because of various moving parts.
Hemang, in your conversation, the way the market sold off yesterday, right? Anything is it to do with these tax changes? Are you hearing anything in terms of market chatter, feedback? More money, at least in the next 1 week or so, going into debt funds? Locking in those rates. Anything you can tell us? Yeah, go on.
So, Prashant, I think if you see Bank Nifty has been underperforming for almost now about a month or so, and maybe partly there's something to do with what has happened in terms of this, capital gains, relaxation, indexation benefit which was there. But I do not think that would have a big impact on the market as such, and to some extent that is slightly positive for the banks. So in terms of flows, yes, it's possible that because the already rate of interest are higher and this new changes are going to be effective from 1st of April, some people may take advantage of that, so that might be a factor. But I think the reason why the market sold off yesterday has more to do with the fact that, you have an expiry, and this entire month, the Bank Nifty in particular has remained sluggish and it's underperforming. So I think you might see some sort of a base formation maybe, in a couple of days, and we do expect some uptick because of the severe correction that we already gone through, and there is some degree of stability in the global markets. The contagion is not spreading. And we do think that this would provide a good entry point into some of the banking names.
Okay, a good entry point into some of the banking names. Got that. Anything else that you like, Hemang? What else would you buy in this market, either from large caps or mid caps?
So, Sonia, I think, we think that banks definitely would be on top of mind because of the severe correction, and we think that there is a fair degree of stability when it comes to earning. I don't think there's going to be any major negative surprises. I think auto is going to be a bit patchy because, this Gudi Padwa and the Navratra, the overall response that we've got from the channel checks has not been that great. Particularly in Maharashtra, we haven't really seen any major positive surprise. The rainfall, which we've seen in Punjab, Haryana, etc., could have some negative rub-off. The rural side is struggling. So auto is something that, we are not too positive, but maybe Ashok Leyland or some of the CV companies is where we are possibly buyers. We would avoid IT in a major way, but surely I think some of these pharma and the consumer names which have been laggards, I think you might see some, pop there. We've seen Aurobindo Pharma, Sun Pharma, pulling back very smartly. So I think because of that, you might see some stability and strength in some of these names.
Okay, well, stay on. We'll come back to you in a bit. For now, let's also talk to our corporate. Shantanu Khosa, the Managing Director at Crompton Greaves Consumer Electricals, joins us now about the acquisition as well as the way forward. Remember, Crompton has announced the merger with Butterfly Gandhimati, and let's try and understand what the merged entity would bring about. Shantanu, if we look at the valuation at the time of acquiring Butterfly last year and the valuation being offered in the merger today, it's almost a 10% drop. I understand that market dynamics have also changed. While the CG consumer share has dipped more sharply this time around, that seems to be, a bit of a problem. Can you justify for us what the merger ratio is and how have you valued these two entities to arrive at this equation?
The valuation has actually been done by independent registered valuers. It was E&Y who did the valuation on behalf of Crompton and PwC who did the valuation on behalf of Butterfly. And they submitted a joint valuation report to the boards of the two respective companies. They obviously used their own standard or methods to arrive at a valuation. Once they had a valuation, then this was actually a fairness opinion was provided on the valuation and the swap ratio by Kotak Mahindra Capital on behalf of Crompton and SBI Capital Markets on behalf of Butterfly. And this fairness opinion was provided by these two on the valuation which was delivered by EY and PwC. And this went to the boards of the two companies independently, and then the boards approved based on the valuations provided and the fairness opinions provided.
Are some of the smaller, Mr. Khosa, are some of the smaller shareholders also on board with this, or do you foresee any opposition to this swap ratio at all?
No, we believe actually that this merger is beneficial really to all stakeholders, shareholders of both companies and also other stakeholders, employees, customers, suppliers. And obviously we believe that it's absolutely an appropriate and a fair swap ratio and evaluation. And we are very optimistic that this will be supported by the minority shareholders.
Okay, all right. We got that then, Mr. Khosa. Let's focus on the operational performance. Now, one of the reasons you're doing this is for cost synergies, right? How much have you realized till now? And what's the extent of cost savings you expect in the future?
We expect, as we had always expected, synergies in two areas. First, obviously, cost synergies, and the second is revenue synergies. So let me address them one by one. Cost synergies we have actually been getting over the past 1 year as we put in place various programs such as, for example, common purchase of commodities, so the scale enables us to get better pricing and things like that. Obviously, one of our reasons for recommending this merger is that we believe that once the two entities are merged, we will actually be able to accelerate our program of cost synergies as we move forward. It will move into areas such as, for example, supply chain, logistics, warehousing. Because the businesses are so similar, you won't necessarily need duplication of various elements in the supply chain. Secondly, moving on to what we think is strategically even more important, the revenue synergies. We expect the revenue synergies to start kicking in this coming fiscal and also accelerate as the two entities get merged.
So will the current manufacturing facilities be able to meet the combined needs? Just trying to understand, will there be any brownfield or greenfield expansion that you're looking at?
There are already certain opportunities which we are already beginning to work against. For example, Butterfly today has got unutilized capacity in mixies, while Crompton is manufacturing its mixies from a number of outsourced vendors. So bringing Crompton mixies in-house into the Butterfly manufacturing facility is a project which clearly immediately adds value. Beyond that, we are working on increasing and improving the capacity and reliability and quality of all our manufacturing facilities, both Butterfly and Crompton, by investing in automation, investing in improved processes, investing in more digitization in the manufacturing process. We are also moving, as we do this, to bring more production in-house. Finally, as we need capacity, we will continue to add over time greenfield as we see fit.
Okay. Mr. Khursda, can you quantify how many distributor networks have been added with this merger?
It starts off with a combination of existing Butterfly and existing Crompton appliance distributors. So if in a particular city, I have got 4 distributors of Butterfly and I've got 3 distributors of Crompton appliances, not necessarily fans, I would automatically then have 8 distributors for the combined business. On top of this, I will have to add and strengthen more distributors if I want to grow to a leadership position. This is a step-by-step process which we're beginning in the West and the North starting April, May, June. As we learn from this and as this merger, when it gets approved and formalized, it will help us accelerate this process of expansion.
All right, we're almost done with FY23, sir. What kind of a revenue growth are you working with for FY24?
The best way and the fairest way I would define our objectives would be to grow a couple of points faster than the market in all the segments we operate. Some a little more so, like appliances. And the reason I put it reference to market is because there are still certain uncertainties about market growth rates, etc., looking forward on the next 12 months. But if I look on a more long-term sustained basis, I think we are talking about growth rate in the low teens as a bare minimum.
Okay, what kind of margins are you expecting? I mean, what could the margin profile be, just to understand post the merger?
See, the EBITDA margin right now for Crompton is in the range of 13 to 15, and in Butterfly we have already improved it from a historical 6-7 to about a 9 or 10. We will continue to gradually grow the Butterfly margin. However, again, I don't want to commit to a number because our focus is really going to be more in the initial years to take the synergy benefits and reinvest it in growth.
All right, Mr. Khursda, thanks so much for stopping by and giving us all of those details. Wishing you all the best for FY24. Well, Hemang Jani as well is with us. Hemang, I want to discuss a couple of stocks with you from the cement pack. That's ACC and Ambuja Cements. Now, yesterday, Ambuja Cements, they put it on the exchanges, a presentation as they're meeting investors in Hong Kong as well as Singapore, and they're giving them the roadmap with the medium to around the long-term view. So in terms of capacity, they are committed to doubling capacity to around 140 million tons odd. But they've also given projections about how they expect the coming years to shape up. That's 2023, and they're saying that by 2028, they have a bit of a vision. Now, the capacity expansion will be both greenfield as well as brownfield, but they're saying most of it is likely to be organic in nature, and they're going to be spending close to 46,000 crores odd. Just pull up a quick couple of numbers. ROC, they've given the improvement out there. The EBITDA per ton from around 1,000 rupees, expecting it to go to around 1,400 rupees odd. And this is predominantly going to be led by synergy benefits with the parent company, and 300 to 400 rupees EBITDA per ton improvement they're talking about in FY24 itself. Then the reasons they've stated out is, waste heat recovery system, higher renewable power, entering into long-term fly ash contracts and the likes. Basic thing is that they're looking to improve the EBITDA per ton by 300 to 400 rupees. We have a couple of brokerage reactions. Morgan Stanley, they're saying they've given some direction in terms of their path, but there's still plenty of uncertainty in terms of the expansion, and they need more clarity about this EBITDA per ton improvement. So it seems they're not convinced. JP Morgan, they're finding these assumptions too optimistic, And they had joined us last week, and Pinnack and Parekh said that if there's going to be higher capacity addition by Ambuja Cements, it may not be very, very good news for the industry on the whole, because it will put pressure on pricing as well as profitability. Hemang, well, that's what a couple of brokerages have to say, and that's the vision of Ambuja Cements. What's your view on the stock, both these two? Yesterday, this in fact came in market hours, but the stocks didn't react at all. Ambitious plans, or you think it's gettable?
So Nigel, 2-3 things I would like to highlight here. One is that yes, definitely the plans are looking aggressive. Secondly, there is an impending block sale which has to happen, and it remains to be seen finally the slight dilution that Adani Group is looking at, how it actually happens. Thirdly, we have seen, Nigel, that the raw material prices have corrected in the past 3 to 4 weeks. And whatever EBITDA per ton guidance that the management has given, I think in the context of the raw material prices cut is looking far more realistic. So we think that given that the capex is a very big theme, and there has been some sort of a consolidation and cost synergies that the company will be able to achieve, definitely it would be it would have some positive repercussions. But at this point, we prefer Ultratech and Dalmia Bharat compared to an Ambuja because of the kind of valuation and the overall growth potential that we see for those two companies.
Okay. I also wanted your thoughts on, there's a news report which suggests that the cabinet is set to adopt a gas panel report this week itself. And this is of course for the gas price, APM gas price revision that happens every 6 months. But wanted your thoughts on how one should approach if they do have MGL or IGL in your portfolio. What would the impact be?
So Sonia, I think once this new guidelines are implemented, surely I think for the gas distributors it would be positive, because we've seen a big sell-off in the spot gas prices, and we think that though there may not be a significant margin improvement because they have also taken a corresponding price cut, but the volume story is going to be intact. And within the gas utility space, what we prefer is Gujarat Gas and MGL. IGL is something that we find a bit more expensive. So I think a relative preference would be towards the other two names.
All right, Hemang, stay with us. We'll take a very quick break here. But as we do that, let me quickly tell you what's lined up here in the next 30 minutes of trade. Anu joins in with a quick trade setup. We'll get you the top picks of the day with our technical and F&O experts. After that, the Momentumizer stock for today, we'll get you that. And at 9:10, Nimish will be here with a standout brokerage report of the day. So that's basically what you have coming up in terms of the lineup all the way reading.